bright spot on the market yesterday was the fact that volumes did go up about 70%, but then it's really feeling like last year all over again. The market not able to sustain those gains. Joining me in the studio to give his thoughts on the market's direction, like you mentioned, is Ayodele Akinwunmi, Head of Research at FSDH. It's good to have you on the show today. First of all, maybe we should start by your forecast for 2012. I was speaking with an analyst at FBN Capital last week, and he was giving me 14% upside potential for the market. What are your thoughts?
Thank you very much, Wole. I think our forecast for this year too is close to that. Our report will be released in the next couple of days. We have a forecast of about 13.3% for this year. However, that is still dependent on the quick resolution of the current challenges facing the economy, facing the country, talking about insecurity, talking about the direction of deregulation of the downstream sector of the oil and gas sector. But by and large, and again, you know that we can't isolate the equities market from the economy. So we think that the market should be able to do well if those security challenges facing the country at the moment are given quick attention in terms of resolution.
All right, but let's talk about those security challenges. And I think there's, should I say, very cautious optimism, if any optimism at all, that the government will be able to get a grip on those spate of terrorist attacks across the country. But what's the bearing you think that this might have on the equity market going into this year? And how does it impact the market directly in your view?
Thank you very much. I think we are optimistic that the federal government will be able to resolve the problem very shortly. But then it's about, even in terms of the local investors taking investment decisions, the security challenges may deter them. In terms of foreign investors coming in, you may think it is predominantly in the northern part of the country, but you recall that some of these businesses that are quoted on the stock exchange have operations.
So have a direct impact on performance.
Yeah. So I think that it may have impact on performance. It may not encourage investment, both in the risk sector in terms of expansion of operations, and it may not even encourage financial investment in terms of buying equities. A lot of people may wait. With all these challenges, let me just put my money in bonds and treasury bills, and so which way adversely affect the market.
Let's get your views on MPC going into next week. The rate is currently at 12%. Inflation numbers that came out in December still showing very moderate change. So perhaps that might not have a direct influence on what the MPC would do in next week's meeting. But your thoughts on how they will be gauging the impact of the fuel price increase and the expected inflation increase that we're expecting this year? Yeah,
I think that, like you said rightly, decisions will be based on expectations, not basically on what had happened that is historical, that is gone. But in terms of what they will do this year in this meeting, I do not see them hiking rates. I think that will overeat the system that is heated already. What I think they should do actually is to look for how they can use monetary policy to ameliorate the current issues that we have in the country. Government in providing palliative measures. Okay, I think they need to encourage lending. Okay, maybe to priority sectors of the economy that have the ability to actually create job and generate more employment. I'm talking about agriculture, I'm talking about manufacturing sector. And again, one thing I think may likely happen this year is this cashless economy, which Zero Bank is trying to encourage. What that one will do is to encourage retention of funding financial system, okay, which will enable Zero Bank of Nigeria to make their monetary policy to be more effective. And so they don't necessarily need to increase rates. Now, as a matter of fact, I think they should remove the corridor around the MPC, because the MPR now is 12%, but they're actually lending at 14%. Okay, right. So that to help ease the current situation in the economy and to encourage lending to priority sector of the economy, so that the effect of the fuel subsidy on the Nigerian will be a little bit.
So you think that they should actually relax?
I think they should relax.
You think
policy.
They will do that this
well,
time around?
That's what I think they should do.
All right. Anyway, obviously what you think may not necessarily go with what they would do. But let's come back to the markets, the equity market now. Even if they don't move rates higher, rates are already quite high in the fixed income side.
Yeah.
That is having a bearing on the equity space. Going forward, how do you see things changing? How do you see the dynamics changing in that regard? FBN Capital, for instance, when I spoke to their analysts, they are of the view that rates are already at a point where they just have to stabilize, regardless of any further rate hikes. Do you share that view? I mean, for bonds now.
Yeah, I think that, I mean, like I've shared with you before, rates at the current level are high enough in terms of the yield now, bond and deposit rate and treasury bill rate. For instance, for the treasury bill rate now, we're talking about 1 year paper in the region of 19%, 20%, okay? Now, that rate is enough, is good enough to make investors or consumers postpone current consumption because of that one. And by any standard, it's attractive for a riskless investment, right? Now, but again, if you look at if all things are on ground perfectly well, now appreciation in equities in terms of capital appreciation and dividend yield may actually overweigh that. Okay, by the time you adjust it for the risk element in it, it could still be higher than that. And that's why I said that the movement in equities market this year will go beyond the performance of the market or the particular companies in extent, but it will be much more dependent on the macroeconomy, the socio-political environment that we have in Nigeria, okay? But if those things are, handled quickly and they are resolved, I think that the current rate in equities, the current rate in fixed income securities may not really discourage so much of investment in equities market, because capital appreciation, if you have 25% from the current level of really low prices, and the ability for these companies to give better dividend than what they did last year, the banking stocks, I think by the time you had those returns together, it will overweigh the bond and a treasury bill at the moment.